So, hello and good afternoon. I welcome you to today's hot topic webinar on Wednesday. It's the 3rd of November, 2021. My name is Jens, and today we want to look at crypto again. 2 weeks ago, we had an introduction to crypto. What is Bitcoin? What is blockchain? And so today the topic is, in fact, let's trade crypto. So it's not just about knowing the theoretical aspects behind this, even though today we want to give a deeper look behind the scenes again to just refresh our knowledge here. But then I want to give you some insights in how to trade crypto, in fact, and not just look at CFDs. So a very comfortable way, very transparent way to trade Bitcoin here within a leveraged environment. But I'd also like to present you some stocks, some very hot stocks right now here who have a very high positive correlation towards Bitcoin, respectively crypto in general. And here, which you can probably use then to, once you say, well, Bitcoin is probably a little too volatile or too aggressive or very erratic sometimes, are there, let's say, smoother ways to trade these assets? And this is exactly what we want to have a look at today here. I want to give you some names you can have a deeper look at. And so let's just probably jump right into the action. By the way, if you watch the recording now on YouTube, don't forget to subscribe to the YouTube channel, set a reminder so that you get a notification once we go live here with a live stream in the morning. It's together with Marcus on the market opening. And there's also my colleague Paul. Paul Wallace, who will here or on Friday, Friday, same time, on trading psychology. I'll give you a link here at the end of the webinar. So set a reminder, leave a comment in the chat box below. If you like what you're seeing, leave a thumb up here. I'd really appreciate this. And by the way, there will be also at the end of the webinar, you will get a link to a survey we are running. The idea behind the survey is, in fact, to get a better feedback from your end. So what can we improve at our end? What you like to see? Which topics you want us to be covered around the topic of trading? So I'm here. Stay and at the end of the webinar for some seconds further. And we really appreciate if you give your feedback here. And so let me now share my screen. And here we want to look at the slides for today's presentation. So let's trade crypto. What's the best way to trade crypto? By the way, let me just check the chat box. I'm talking about the chat box where you can now also here in live event can ask all your questions. So this is where you see now hello traders. So this is where you can ask all your questions, trading related questions. Before we start, I'd like to here give you also again an idea on the current rebranding taking place at Admirals or Admiral Markets. That was before, and now it's Admirals. Admirals is within the industry of FX and CFD trading for the last 20 years, with now over 8,000 financial instruments being offered, fully regulated around the globe, SISIC regulation, FCA, ASIC in Australia, for example, and also known over here in Germany as a DAX expert. So as of now, or at least in my personal opinion, I'm not aware of any offering here which is close to or more attractive than the offering here at Admirals when it comes to DAX trading. And this is usually also something we mention among traders. If you're looking for trading actively the DAX, then Admirals is definitely worth a deeper look. So feel free to check out the website, admiralmarkets.com. Admirals.com, and there's now the point. What's happening there? Why is the rebranding taking place? That has to do with the fact that beyond FX and CFD brokerage here, Admirals is now stepping towards a global financial service provider. So also offering a credit card, for example, also some wallet solutions here, wallet solutions in their traders room. Please check this out too. True multi-asset brokerage. So with the Invest solution, you also have a broker here, which is also focusing on physical stocks and long-term investment solutions, ETFs, and so on and so forth. So all the information available on the website. Check out admiralmarkets.com, respectively admirals.com for further infos. And here's the slide on One World, One Broker with all the current regulations. The most recent one was, in fact, in Jordan. Also here, all informations can be found on the website. And now this is today's agenda. So this is what we want to look at today. So first of all, give a quick review or a quick overview on the characteristics of Bitcoin, going hand in hand what we already looked at 2 weeks ago. And then I'd also like to go again over the topic of blockchain technology. I received some emails based on my presentation, which told me or asked me if I could introduce this concept once again, because it sounded very fascinating, but to some a little, let's say, a little too complex probably. And so, yeah, I included it here once again. So it's in fact, very, very fascinating topic. It's also important to understand this because one company I will present to you and not just announced, but is in the business of blockchain technology / Bitcoin mining. It's very active there. The company is called RIOT Blockchain. And so if it's in the name of the company, well, it probably makes sense then to understand a little or again and go again over the topic of blockchain technology. We want to go via CFDs, over trading cryptos with CFDs, with Admirals. And then also I'll give you some, probably my personal top 3, even though I have to admit, I took out one at least here. So I haven't included it in the presentation, but also another stock you probably want to give a deeper look. It's Coinbase. Coinbase is also part of the ARK Innovation universe from Katie Wood in the ARK Innovation ETF here, where Tesla has the biggest chunk, in fact. Second is Teladoc, and the third biggest position within her innovation ETF is in fact Coinbase. And that being said, then is also certainly one reason Coinbase is a crypto exchange, if you want. And that being said, makes clear why there's a positive correlation, not just towards Bitcoin itself, but also to other crypto currencies like Ethereum, for example, or everything around Doge and Shiba Inu. I don't know, let's say more speculative cryptos here, but our main focus will be on the main cryptos, let's call them Bitcoin and Ethereum in this context. But still, obviously, a stock exchange like Coinbase is also profiting here from elevated volatility in the crypto space, respectively in the Bitcoin, Ethereum space. So characteristics of Bitcoin. Let's go through them once again and then point out here what is special about Bitcoin. So first of all, when talking about Bitcoin, I mean, we called this presentation or this webinar now crypto, but certainly Bitcoin is very closely connected to crypto. It's like a placeholder. Can we say this? I'm not sure. So it's like if you talk about crypto, some have the feeling you talk about Bitcoin. In fact, this is not the case, but I can understand that people think of it that way. And so that being said, now delivers a bridge here why we want to look at the characteristics of Bitcoin and not necessarily only on crypto. Therefore, I recommend looking at the webinar 2 weeks ago. There we had a broader introduction to this topic. And so Bitcoin is a cryptocurrency, a digital currency in which encryption techniques are used to regulate the generation of units of currency and verify the transfer of funds operating independently of a central bank. So that's it around the introduction of Bitcoin. Bitcoin is probably the world's most known cryptocurrency. As I already pointed out, seeing a growing number of businesses, respectively individuals, using BTC here, BTC USD mainly. Now the question is how to acquire Bitcoin. And there are different channels. So in fact, we can break it down to, first of all, payment for goods or services. So for example, I just it's not really a joke, but I just play here, given the current developments there. I offer an option to buy goods via my website via crypto. So you can buy with Bitcoin whatever I offer on my website. Mostly educational material, but it's in German, so not really of worth probably now for you here in the English speaking community. But yeah, this is one way to acquire Bitcoin, in fact. So as payment for goods and services. Then what you can also do, you can purchase Bitcoins at a Bitcoin exchange. So there's a crypto exchange to make it a little broader. I mentioned already one, Coinbase, in this context here. So this is where you can buy and sell cryptos. And then you can also exchange Bitcoins with someone near you. So we are working with wallets here, and I could give you my ID here, my wallet ID, and you could send me Bitcoin respectively. You give me yours, and I send you Bitcoins, and thus we could exchange here Bitcoins with each other. And then what we can also do is, and this is something what we want to look at here, especially when it comes to the company Riot in this context, Riot Blockchain. So we can earn Bitcoins through competitive mining. The main mining field here, the biggest player here, or the biggest players, probably a better way to put it, can be found in China, in fact. That being said, mining and blockchain here delivers straight away the way or builds a bridge towards the next slide, the blockchain, and what this is. And let me just go with you through this process once again to understand this concept. It's a very elegant, it's a very smart concept, in fact. And one of the main reasons, in fact, why I, especially as someone who has a mathematical background, just smiles when seeing such a smart solution. So it's like, I mean, probably some of you have talked to mathematicians before, or probably studied mathematics themselves. So it's not just that mathematics in this case are searching for proofs, or searching for trying to prove a theorem or something like that. But it's not just about brute force and just like get the proof done, but it's also about being or finding the most elegant way to solve a problem and to prove a theorem, for example. And the blockchain technology is that being said, it's like it's the probably most elegant way to solve let's call it payment problems, or fiat money problems, probably you could imagine, in fact. And so what happens, to just give you an idea, let's assume you say, hey, I want to buy a pizza. Let's say you want to buy a pizza with Bitcoin, and so there's now the transaction request. So from your wallet, you send it here to then, and the next step, a so-called P2P network. By the way, there's something missing. Oh, I'm sorry. So here, usually there's another question mark in the middle. There's a problem or a mistake here with the presentation. But you send the transaction request to a P2P network. It's a peer-to-peer network, and it's decentralized. And all these participants within this network here now do the following. They try to prove whether your transaction is valid or invalid. So this is what you do. You send the transaction request over to this P2P network, saying, I want to buy a pizza with my a Bitcoin, and now the P2P network checks whether this transaction is valid. So put it simply, if you have enough Bitcoin in your wallet so that you can pay for the pizza. And so this is now here bringing us to the proof of work in this case. So these are the people, and those have the possibility to prove whether this request is valid or not. And so as you can see here, I pointed it out that way. The guy here in the lower left, he was the quickest to find a solution and see, okay, yes, the transaction is valid. And that being said, brings us here to now the next step, that one block is included in the chain, and this is why it's called the blockchain. So and here within this block, there's all the information being included, like who requested it, or sorry, the number of the wallet in this case. So it's transparent, but still it's anonymous in this case. Who requested it, which time did it take place, how long did it take, and so on and so forth. So all information are safe within this block now. And then after the transaction was proven to be correct, then such a block here is included in the chain. And here now you see that the transaction is confirmed in this context. And this is what's missing here now. The guy who was the quickest then is rewarded with a Bitcoin, which he's sent his way. And then when people say, okay, you confirmed it, you added value, or you added a block to the blockchain in this case. So that way you get rewarded for mining. And this is what you can find then in the fourth point on the slide before, when I say earn Bitcoins through competitive mining. So again, this is very energy it's not efficient. So it needs a lot of energy. So there's lots of work, respectively, mathematical knowledge, respectively, let's call it speed within the transaction, and proving the transaction to be correct. There's lots of energy being needed for confirming this. That's one of the main points why people here, especially in the current environment in which we find ourselves, with overall finding new ways to or to be more efficient when it comes to use of energy, respectively, a clean, clear energy, green energy. In this context, this is where all discussions here around Bitcoin are currently concentrated, and in finding ways, in fact, to be more efficient, and also be more efficient from an let's call it from a green perspective, or from an energy perspective. But now, don't let things get too complicated here. We now want to jump, after all of this now around the introduction, we want to jump into the action and see several ways how to trade crypto. And so the first way which comes to our mind, besides the, let's call it, physical way to trade crypto via an exchange, but it's very, very cost intensive. So just imagine we are talking here about Bitcoin trading at, I think 60,000, 62,000. Let me just check. One sec. Where we have it. Bitcoin. 62. It's 62,000. So just assume now you have to have 62,000 USD in your account to buy one Bitcoin. Certainly, there's some ways to trade it in a smaller way, so you don't need to put up 62,000. So you can also trade fractions of Bitcoin. But still, it's to some extent very intensive then to trade crypto here in this context, and especially when it comes to speculative demand here in this context, especially CFDs are coming to our mind. And this is especially true because CFD have a very great way not to just trade the long side, which we can do in trading physical Bitcoin via an exchange, but we can also trade the short side. You've probably seen last week, today is Wednesday. Last week, I think it was a Thursday, if I'm not mistaken, there was a massively heavy flash crash, which pushed Bitcoin lower, something like 4,000 or 5,000 USD, and below 60,000. We bounced back, and we saw a quick flush only on the downside to just see a quick bounce. But just imagine now you want to participate in such flush outs, or respectively, you've also seen probably developments around Bitcoin. We will see in the next slides a chart here on Bitcoin. But just imagine you're now seeing the run higher at the beginning of the year, and this potential euphoria taking place, and then saying, okay, and it's not just that I want to cash in the chips, but I think we are about to see a top out here, at least short term. You identify such a pattern also on the longer time frame probably, and say, I want to short Bitcoin. You can do this via a stock exchange, or a stock Bitcoin exchange. I'm sorry. But what you can here do then in this context is, in fact, what you should do, what you can only do, is you can do it via CFDs, where you're trading, to put it simply, you're trading rights, in fact, and they're 100% cash settled, and that this is giving you an opportunity here to short then Bitcoin or crypto in general. It's not just Bitcoin related, but also Ethereum related. But the thing is that here we now see some problems occurring. Let's put it that way. And the problems are that, first of all, crypto in general, it's not just Bitcoin related, but crypto related in general, is that you see you have a very volatile asset class, and you have daily price swings, changes here in excess of 10%, and they are very frequent. So it's sometimes happening every day, to be honest, or no, not really every day, but more often than you would think within one trading week. Let's put it that way. And so that being said, especially if you're an active trader, makes it very important that you have a strict risk and money management within your trading strategy, within your trading in general. And this is in fact the key to the long-term success in your trading here when trading, actively trading, especially crypto, from the long or the short side, doesn't matter. So so that being said, since I mean, I could say that now, and I have some experience here in the trading world in general. So not just crypto related, but also in the trading world in general. You can say that over and over again, but people say, especially those thinking they know better than you do, say, okay, I'm just going all in, or I'm here actively and massively leveraging my position to get the most out of every price swing which occurs. And that happened, especially something like 5 years ago. So especially around 2017, at the end of 2017, with the crypto boom back then. That was when Bitcoin went vertical for the first time, let's say, and we pushed to something like 20,000, and then collapsed from there to 3,000, and then took off from there again over 2018, 19, and 20 then. But these volatile moves, especially around 2017, that was when here the regulators came into effect here, and there was a first step being taken to reduce the volatility among or within the equity curve, or those active crypto traders, especially in the CFD industry. And there was this ESMA decision. Some of you probably remember that. There was an introduction of a leverage cap, not just on crypto, but also on FX, and also on indices, and on trading CFD commodities, and also on and so forth. But what the ESMA did, in fact, was they put a cap here on Bitcoin CFDs for retail traders at 2-to-1. So that means, in fact, if you want to trade one Bitcoin physically, you can do this for 60,000 now. Trading with a leverage of 2-to-1 means you only need to put up 30,000 only. Put 30,000 up now to trade one Bitcoin here. Again, you can also scale it down to 0.01 Bitcoin, but all in all, what's very important in this context is to see here that they already tried to reduce the overall volatility in the equity curve. And now there's also one very important aspect in this context I'd like to point out, especially for active traders, and when you now wonder how to or why should I trade CFDs here, especially when it comes to speculation. It's not about longer term investments. I think there's other ways then in this case. So I think what's the most likely solution here for you as a long-term investor in crypto? If you don't want to participate in the daily swings on the up and down side, you most likely say, hey, I have a wallet, I have my physical Bitcoin exposure there, and then take it from there. But if you want to actively trade Bitcoin, CFDs are a very, very great way to do that, because there's also within this ESMA decision now a negative balance protection for retail traders. That means your account can go negative. So the only amount you can lose here is in fact the amount you deposit in your account. This is a very important aspect in general when it comes to CFD trading, and the overall advantages, for example, when trading CFDs. And if someone asks me, hey, why should I trade the CFD? Why not trade, let's say, a future? So Bitcoin future, for example, or options in this context, because in case, especially pointing out futures here, you have the risk of your account turning negative. If there's an aggressive move against you, and there's no price and there's no fill on your, let's say, stop, for example, but the market slips just through. And a perfect example in this context is, for example, the developments around the S&P in 2015, once the or the Euro Swiss franc in this case, once the S&P took out the 120 pack, for example, there were no prices available. So, and in fact, FX markets didn't know which prices were fair, or at least where they could put a price here for minutes after the pack was removed. So there were prices as low as 85.85, if I'm not mistaken, or something like that. So we went from 120. So this is like a 30% move in the most liquid market in the world, so the FX market. So and there we could see that this is definitely something which will happen. Most likely it won't happen most of the time, just due to the fact that there's no such thing as a currency peg in the crypto world. But still, this is something you should keep in mind, and even, or especially probably in the crypto space, with all the current developments taking place. And we pointed out several aspects in the webinar 2 weeks ago. Just imagine, or remember when I talked about also the dark side of crypto, for example, and we brought up ways how crypto could be used, or Bitcoin could be used here to, for example, to not be a victim to capital controls from the Chinese government, for example. So or from the Turkey, from the Turkish government, for example. All these developments, they play a massive role. They are also playing a massive role. So, I mean, we call this the dark side of crypto, but we should also be clear about the fact that crypto, respectively Bitcoin, delivers, at least in my personal opinion, the most democratic way to look at a financial system, probably, and a system people really can exchange money with each other, and goods and services being paid for with cryptocurrencies. This is the most democratic way, and it's not. There's no need for a central bank, or there's no need for an overall power which overlooks it all. It's 100% democracy, if you want. So this is the way you could look at this. And this is one of the main reasons why regulators around the globe, and just regulators, but also governments around the globe, are very, very skeptical about crypto, because it takes away probably the most important power they have over the people. And what is this most powerful thing they have over the people? They are the lords of the money, if you want. So they say, well, this is our money, and we decide whether you get access to this or not. In case of crypto, they can, because there's no such entity like a central bank, but it's decentralized. It's a fully decentralized and fully democratized way to exchange money, in fact. And this is a very, very important aspect, because now you see where this all leads to. Just imagine there's now a country like China. They're going after crypto right now, and the mining space there is very, very big. And they're going after crypto in a very aggressive way. Just imagine they say, well, we prohibit everything which has to do with Bitcoin. And if there's a business out there accepting payments in Bitcoin, we shut it down. And you should believe them. It's not just the Chinese, but we've seen this in the Western world too. So I just remember you guys on lockdown. So the governments around the globe, they can just come out and say, hey, we shut down the businesses, and you just look and say, okay. And why? Well, we don't know. We don't need a why. Okay, if you need a why, then it's COVID. And okay, do you have any numbers to prove what you're doing? No, we shut you down. That's it. So people are just looking and saying, okay, aren't there any stats or something like that? So I just have to shut down my business? Yes, this is just the way they do it. And that they are capable of doing that, that is what we can see right now, right in front of our eyes around the globe. And this is something we should remember when it also comes to crypto trading. Now we come to the very smart part here in this context. So just imagine now you're trading crypto actively, and then in this context you just see some news over your ticker, running over ticker, saying, well, Bitcoin is prohibited from now on, so there's no Bitcoin trading at all anymore. We prohibit it. Every government around the globe, we just prohibit it. So you just can say, okay, we can still exchange, but just imagine that the trust would be shattered that moment, and the massiveness of a move lower will be extraordinary. So there's a high chance then that here slippage could occur, and that you're not getting a fill on your stop. You're probably long for whatever reason. Doesn't really matter. It doesn't matter which time frame you trade. There's no prices anymore on the downside, because no one knows what this means. The same is true when for example the SMB took away the Euro Swiss franc 120 pack. So they're just taking, there's no bids anymore, and they just take the price out. And now once trading CFDs, and this is where we close the cycle now, well, this means that you're it's not that you're trading risk free, but as a retail trader you have at least no you have a negative balance protection. So that means that there's no risk for you to lose more than what you initially deposited. So this is one very, very important aspect when it comes here to trading Bitcoin via CFDs. And if there's someone out there asking me, why should I trade Bitcoin here via CFD? And so in addition to that, there's also with Admirals an offering There is so-called conditional orders, which are called here, for example, volatility protection, which have additional utility for highly volatile instruments like crypto in this case. So all informations are available on the website. So here is the link. Quick overview of the most actively traded crypto CFDs at Admirals here. So it's so you can see it here, BCH, you can see BTC, there's Bitcoin, Ethereum, Litecoin, Ripple, here in this case, a Bitcoin Cash, by the way, so I think BCH, if I'm not mistaken. All information here. I also here have the website. So this is how it looks like. And this is, by the way, also where you could now check here, for example, where Bitcoin trades right now, Ethereum, XRP, this is Ripple, as I already said, BCH, this is Bitcoin Cash. Long thing short. So all the information is available on the website. Let me just share, by the way, here the link within the chat box. There we go. So I call it website. So, and let's just move on here now with trading crypto via stocks. So this is probably of higher interest than probably for you. So what we have here is I have Bitcoin in candle, and then I overlaid it with a chart, and you can see there's a strong correlation to the orange line, respectively here to the blue line, in fact. And what is this? Well, this is here on the left. It's Bitcoin overlay, so Bitcoin in candles overlaid with MicroStrategy. So this is a stock you can trade, MSTR. We will go into further details on the upcoming slides. And here in blue, you can see RIOT Blockchain. And also we go into further details around this. There's also another stock beside Coinbase I already mentioned. I will present to you here at the end. One which will, by the way, present numbers after markets close tomorrow. So on Thursday, it's called Square. Square, you probably heard about it. This company is a fintech, which is CEO'd, or which CEO is Jack Dorsey. And who's Jack Dorsey? Jack Dorsey is also the CEO of Twitter. So also one guy you should not only just have in mind when it comes to trading Twitter and the stock, but also follow on Twitter, because sometimes he makes some very, very smart and very interesting remarks on the plans from Square in regards to the overall Bitcoin business. But before we come to Square, Jack Dorsey and his tweets, let's here first of all have a look at RIOT. And no joke here, I will show you a very interesting tweet I came across something like 10-15 minutes before I started the webinar here. They just released something very, very interesting. And by the way, let me just the reason is I don't have the MT5 open right now here from Admirals is because of resource issues at my end. But let me just probably check out here whether I can find let me just see whether I can find an intraday chart from RIOT and see whether there is some development which takes place. No, it's not that interesting, in fact. So just, well, no, nothing special. We just reclaimed WeWa, but it's from one minute. No, let's skip this. Doesn't make sense. But here now, let's have a look. Let's have a look here at RIOT Blockchain, and then what this company does, respectively, what was just released several minutes ago, so that you can also see why there is this big positive correlation when it comes to Bitcoin. And also beside of that, very important aspect I'd like to point out here. I didn't mention that, and I want to be very careful about this, because I already said there's high volatility within the crypto space in general, Bitcoin. But some people might say, hey, it's just a leverage of 2-to-1, and I have to put up so much margin then to keep a position. This is like, isn't there a better way to somehow get access to higher leverage? Well, certainly you could here look for becoming an eligible professional client at Admirals, but only if you fulfill certain criteria. But also, I mean, the high correlation when it comes to crypto stocks and crypto, respectively Bitcoin, for example, brings us here to stocks in general, because here you have a leverage of 1 to 5. So this is at least 2.5 times higher than the leverage you get on crypto in the retail space, and also I think in the professional space, if I'm not mistaken. But this is another way to overcome this, beside the fact that there's also something very interesting taking place. But this is something I leave to you. So this is where you have to put in the work. You can sometimes anticipate certain moves in crypto stocks like RIOT or like MSTR, for example, on moves you see in the crypto space. So there's sometimes it's just a short period of time, but there's a lag sometimes. So you might see a pop in Bitcoin on the upside, and RIOT, for example, the stock does not move. But you can then probably say, okay, especially if we see some kind of stronger extension on the downside. Let's say we're working with something like VWAP here, volume weighted average price. You probably have seen the webinar earlier here on this topic, and you say, hey, we are so extended here on the downside for whatever reason. Let's just assume we're sold off that day. And then you see the pop in Bitcoin, and the stock did not react so far. Usually the Bitcoin price is a leading indicator in this context. So that means you then somehow expect RIOT to follow suit, probably with a short lag, but still following the pop higher. This is definitely something you should keep a closer eye on here, and which is probably of interest to also find an edge here in crypto trading, and when trading crypto stocks in this case, and how to use here then Bitcoin, or respectively crypto in general, as a leading indicator, for example, based on positive correlation. But now coming to RIOT. So RIOT Blockchain is a Bitcoin mining company supporting the Bitcoin blockchain through rapidly expanding large-scale mining in the US. So the company focuses on expanding its operations by increasing their Bitcoin mining hash rate and infrastructure capacity. Hash rate, we will go through this here via Wikipedia actually a little later. But here, this is the earnings per share. This is from the website. I have, no source, I'm sorry. But this is from a website. It's from NASDAQ, NASDAQ.com. They have information here around the companies which are listed here, then in this case on NASDAQ, and thus have here also numbers on the earnings per share then from, in this case, RIOT, a company which is listed on NASDAQ. And so you can see here, this is their earnings per share, and the estimate, respectively the report. So so far, especially here, that was in the fourth quarter of 20, for example, there was a better than expected number. And so what you can see here is now 3Q. So this is Q3 numbers. They will be released, by the way. Let me just see. I think it was the 11th of November, if I'm not mistaken. Let me just see. 15th, I'm sorry, 15th of November, there will be numbers being presented for this quarter. So as you can see here within the chart, you can usually see some stronger moves that day once their earnings were released then in this context. So definitely something to keep an eye on. And now let me just switch over here, hash rate, respectively, RIOT. So before I started the webinar here, that was just released here. So you can see that there, 1:31, so half an hour before we started the webinar here. So this is London time, if I'm not mistaken. So RIOT Blockchain produces 461 Bitcoins in October 21 and announces increase in targeted hash rate for 22. By the way, let me just here, target, oh no, I'm sorry, hash rate, Bitcoin. Let's quickly go through this here, what this is, what this means. Do we have a, wait a second, hash rate Bitcoin Wikipedia here. Let me just see. Do we get some infos here? Yeah. The thing is why I have to be very careful here is because it's getting very complicated quite quickly. So and I'd like to avoid this there, and this does make sense. It's an SI derived unit representing the number of double. Okay, forget about this. That doesn't make sense. Let me just see. Hash per second. Yeah, that doesn't make sense. So let's look here. What is this? Finance high. So cryptocurrency miner. So a cryptocurrency hash rate, also called hash power, is the measure of a cryptocurrency miner's performance. The faster the hash rate, the more profit a cryptocurrency miner can make. So what do they say here? Well, if they act or look for increase their hash rate here, they are looking for ways to here improve or they improve their overall efficiency here and produce, respectively, mine more Bitcoins. So, I mean, that makes sense, right? So that then if I'm a company, I'm working in this space, that makes definitely sense to find ways here. How they do this is probably something they get further details then in their overall conference call here, an earnings call. But all in all, what we can certainly see is that, for example, Riot here is currently underperforming Bitcoin. So you can see here the massive run higher, which we've seen, that was in 2001 at the beginning of the year, once Bitcoin shot over to 60,000. And right now we are trading here more than 50% below these levels. So the interesting thing now is that if Bitcoin continues to trade at these elevated levels, then probably rather sooner or later, especially if we make it back here about 40,000, sorry, 40,000, it's a little bit too much, 40 USD per share, then probably we will get to see a quite heavy breakout here on the upside if they can follow suit with their increased target, or with reaching their target to increase here the hash rate to a higher level. So this is definitely a stock you should look at. And again, also from an active trading perspective, sometimes the moves here are more smoother sometimes, even though I have to admit that the crypto itself, so Bitcoin especially, has a very clear, clean technical structure. So but probably this is increased even further than when looking here at so-called crypto stocks in this space. So another company I'd like to point out here is MSTR. So all these, so Riot and MSTR and Square, and also Coinbase, then in this case, all these stocks are tradable via Admiral. So let me just here go back again to the website, and there go to products, and then we go to stocks, and there what you can do is show all stock CFDs. You can type them in here, so like Riot. So this is where you can see RIOT Blockchain. Okay, so you can also MSTR, which we will introduce in a few seconds. So here's MicroStrategy, Coin. So Coinbase here in this case. So coin.us, very important. And you can also trade here via the Invest solution, by the way. And by the way, let me just see, ARC Innovation, which is not tradable via Admirals. But if you want to duplicate the portfolio here from Katie Wood and the ARC Innovation ETF, what you can see is they give you an overview on their current holdings, and you can see here Coinbase is right now has a weight within the ARC Innovation portfolio of 6.13%. So third largest holding after Tesla and TDOC in this context. So when public, by the way, in April, probably we've seen that corresponded with a short-term high in Bitcoin. Now, let's come back. Let's come back to the presentation. So MicroStrategy. MicroStrategy is a company that provides business intelligence, so BI, mobile software, and cloud-based services. And they have a very, very charismatic CEO. His name is Michael Saylor. So this is here on Twitter. It's at Michael line here Saylor. And he's also very present when it comes to interviews on CNBC, for example. Follow him on Twitter. I think it's worth it. So to get some further ideas also on the overall philosophy behind MicroStrategy. And what they did was in 2020, MicroStrategy invested 250 million USD in Bitcoin as a treasury reserve asset, seeding declining returns from cash, a weakening dollar, and other global macroeconomic factors. So very, very skeptical about the overall US dollar performance, respectively the overall course, which is currently presented from the Fed in terms of more liquidity provided, while the overall economic output is massively reduced here. So very, very skeptical about the overall outlook for the US dollar, also as a world reserve currency probably. And as of May, The company has spent over 2.2 billion here purchasing Bitcoin at an average purchase price of about 24,311 USD per Bitcoin. So no big surprise to see here that the company is currently rising higher and also seeing a bullish breakout, given the fact that Bitcoin performed really well, and they're obviously making tons of money USD wise then on their current Bitcoin holdings. So if you want, I'm not really sure, but the business model here behind RIOT is on mining. This is the mining process. In case of MicroStrategy, I think it's more like at least my personal opinion. So probably I'd like to be a little careful here, but this is like a bet, the global macroeconomic bet on or against the US dollar and pro Bitcoin in this context. So this is definitely something to keep in mind once you decide to hold also longer term position probably in MicroStrategy. But if you say, hey, I'm not really sure whether I want to have such a Bitcoin wallet, and I'm not really sure about it. I mean, if you want to have at least part of your portfolio being invested in Bitcoin without opening a Bitcoin wallet via an exchange and everything, and not really being sure about the overall strategy, probably at least a small portion of your portfolio is a good investment then, where you should definitely give MicroStrategy a deeper look here in this context, given their very high positive correlation towards Bitcoin. That's at least just a personal take. So don't take this as an investment advice or something like that, but just keep it in mind if you played with such a thought in the past. And also here Square. So very important because also one of the bigger companies, also very interesting, also not just with a very a strong growth outlook. So numbers were very strong last quarter here. But they find themselves also since the beginning of the year in a very an ongoing consolidation process. So it wouldn't be surprised to see rather sooner or later a Bitcoin breakout here. There's also some mentioning, which was brought up from Jack Dorsey, I think 2 or 3 weeks ago, when he said that they are now looking for ways or making it possible for the let's call it natural retail guy, so as we are, so to say, hey, we want to open the door for you here to the world of mining in Bitcoin and participate in this very smart blockchain technology infrastructure, and deliver ways here to invest in this space and also participate in the developments taking place there. So long-term consolidation we currently get to see. Numbers will be released on Thursday, so tomorrow after the market's closed. Also here, let's come back here to this slide. So here are the earnings for this week, and here's Thursday. So Square will deliver numbers more tomorrow, so probably of interest for you. And so that being said, let's come to Square, probably introduce the company before we talk further on this. So Square is an American financial service and digital payments company based in San Francisco, California. Current market cap 106.36 billion. Square reported Q2 21 adjusted earnings 66 cents per share, beating the Zacks consensus estimate here by 106.3%. So very, very strong. Net revenues 4.68 billion, improved 143% from the prior year quarter, so Q2 2020. And Square is creating a new business dedicated to decentralized finance, or DeFi. So applications for Bitcoin. DeFi applications rely on smart contracts rather than banks or other third parties to execute transactions. So it's probably a very interesting place to look at, especially if you're very skeptical about the current developments in the investment banking world, in the banking sector in general, retail banking, and wondering what comes after and where crypto comes into place and which company play in this field already and are well established. And Square is definitely one of the first choices here in this context. So for people interested in this space, so not just participating from swings on the up and down side here, but also longer term in the overall developments taking place in the crypto space. And well, probably have seen about the developments, heard about the developments here from Facebook and the metaverse, which is currently played up and down in the social media sphere, let's say. And well, we're getting more and more digital. So that being said, brings us to a point now where we should probably think about where are the players which will play an important role here in the developments in this digital currency world, crypto world. And certainly Square comes to mind here when talking about fintech innovations in this space. So that brings us to the summary for today's webinar. So there are different ways to trade crypto, as we found out now. The main sources, and personally, at least for me, are CFDs and stocks. Based on all the points I made clear, I hopefully made clear here with the advantages when trading CFDs, negative balance protection, trading from the long, from the short side. When it comes to stocks, sometimes it's a higher leverage you get, even though there's a very, very positive correlation between a crypto or Bitcoin, especially, and certain stocks here. And still, we have massive volatility with daily price ranges in excess of 10%, which results in strict risk money management to be key for the long-term success when it's investing in and trading crypto. And in case of CFDs, as pointed out, negative balance protection for retail traders when trading cryptos is worth mentioning, definitely. And stocks have not just high positive correlation here to Bitcoin with MSTR, RIOT, Coin. I'd like to add this here because I skipped it, but it's very important also to put it in here in this discussion. Square, SQ, and also increased leverage if you're interested in this and so I'm sorry, it's right. I'm sorry, I was just already thinking it was December, but no, it's still November. So on Friday, I'm sorry, it's not Wednesday. This is what's wrong here. Let me just change this. Friday. So on Friday, 5th of November, Paul will be here and talk to you here on trading psychology and how you can improve your trading in this area here. So he will answer questions around the challenges and how to avoid, or no, what prevents traders, in fact, to improve in the field of trading psychology, put it that way around. Then how we can utilize here good practices from great traders to help us. He will certainly give some deeper thoughts here on great market wizards probably, and what you can do tomorrow to improve your trading based on this knowledge, which will presented here by Paul. So London, 2 p.m., 5th of November, 21. Check your inbox for the webinar link. Check out also the website, admiralmarkets.com. Head over to the education and webinars tab and register there for all the webinars which we produce for you here in the trading community. These are the contact details. Fully regulated broker brings us here to the risk disclaimer. And yeah, that's in fact it. Read it carefully. If you have any questions, again, please feel free to ask them below the video. Here, leave a thumb up here, subscribe to the YouTube channel, set a reminder so that you're informed once a new webinar here is uploaded at our in our YouTube channel. And that's it from my end. So all the best, happy trading, watch your stops, and talk to you again then next week. I really look forward to it. See you. Bye-bye.